Hello and wish everyone a happy new year. We have a constructive outlook for equities for this new year 2022. We believe investors with a long period investment horizon for the equities asset class will continue to do well and benefit from the power of compounding. While we have a positive outlook with the year's perspective, we cannot rule out volatility during parts of the year, but would refrain from and advise against timing the market. Our approach to stock selection and portfolio construction remains as before, predominantly bottom-up driven. The outlook for global growth in CY 2022 is fairly robust and in fact ahead of the decadal averages. More importantly, Indian macro outlook remains stable on most fronts. GDP growth outlook is at over 8%. Fiscal and current account deficits, inflation and interest rates have been and are expected to remain range bound. High forex reserves along with a manageable level of current account deficit should keep the INR stable as well. All this provides the right background for equities to do well. Most recent high frequency activity indicators also suggest that we are on the path of robust growth for the year ahead. A robust global outlook is also good for Indian exports. As we enter the new year, the outlook for urban consumption has improved, with strong hiring in manpower-dependent IT services industry, well-funded new age businesses, and even from the BFSI space. Rural consumption, while partially dependent on monsoons, gets policy support and support from the continued thrust on the infrastructure sector. Besides infrastructure, housing spend could see an uptick after many years of lackluster investments. Incremental capex in the current year could also get a leg up from rising capacity utilizations across industries, from global cyclical sectors such as metals, and from sectors under the PLI scheme. In the recent years, Indian corporates and banks have considerably improved their balance sheets and asset quality. Recent quarters have not seen any cut to aggregate earnings growth for FY22 or FY23. We think corporate earnings, after a strong plus 30% jump in FY22, will continue along a healthy mid-teens range for the coming years. The quality of earnings will also have an improving bias, and together with growth will be an important support for market performance. Just like last year, we expect many businesses to list in the current year. At the right price, some of these could be opportunities to consider for our funds with a long-term perspective. Yet, volatility can emerge during the course of the year. It could come from a stronger and more deeply entrenched inflation in the Western economies and the market or policy response to that. It could come from any policy misresponse from regions such as China, both to the ongoing Omicron spread and while trying to revive the growth outlook within the home country. Lastly, COVID evolution will be monitored. In the base case, given past experience such as the Spanish flu of 1918, where the third wave was not as lethal as the preceding two waves, we expect the coronavirus to temper its virulence, even though the current Omicron variant is highly contagious. India continues to be on a strong structural growth path, and the ongoing market volatility has tempered valuations. Investors with a longer investment horizon will benefit from appropriate allocations to the equity asset class and from sustaining such allocations during bouts of volatility. As earlier, we will move beyond these near-term uncertainties by being focused on bottom-up stock selection and portfolio construction. On stock selection, we'll continue to invest in strong business models addressing various structural opportunities India offers and at the best possible margins of safety. Additionally, we seek to construct a balanced portfolio of such businesses along with some deep value plays to successfully navigate the year ahead and beyond. With that, I wish everyone a happy and safe new year.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.